Hello everyone, welcome to our bi-monthly series wherein we discuss snippets from our research desk. The topic of this video is, could small caps overtake mid caps? So today I want to address a question that's becoming increasingly relevant for investors in the Indian equities after a decade where mid caps have clearly dominated. Is that the story finally changing? Could small caps be better bet for the next market cycle? Let's walk you through the data. First, let's acknowledge the facts. Mid caps have been exceptional. If you see the chart on the right, over the last 5 years, the Nifty Midcap 150 has delivered over 18% annualized returns, meaningfully ahead of the large cap and the small caps. But here's a structural problem. SEBI's definition locks mid-cap funds into just 150 stocks. And with thousands of crores of AUM chasing that same narrow universe, valuations have become stretched and alpha has become genuinely hard to find. Look at the second chart. That is, the mid-cap fund managers have been negative versus their own benchmark on a 3-year, 5-year and a 10-year basis. So that's not a bad manager problem, but that's a structural crowding problem. Small cap managers have continued to generate a meaningful outperformance because they have a much larger fishing pole. So why small caps are different this time? Now here's where these things get interesting. The typical pushback on a small cap is quality. Many of these companies were leveraged, governance was weak, cash flows were unreliable. That story has now fundamentally changed. Look at the top row. The net debt to equity in a small cap universe has collapsed from zero point 0.5 in financial year 19 to nearly zero today. Return on equity has improved from 9% to 12%. Companies are now funding their growth through internal cash flows and not via debt. So this is a qualitatively different small cap universe. On a valuation basis, yes, small caps look expensive on a P that is like 33.4 versus mid caps 28.6. But when you look at price to book, small caps are trading at 3.7 versus the mid caps at 4.6. So this is after a 30 to 40% correction since September 2024. Book value is now more honest measure, and on that basis small caps actually are cheaper. Now coming to the table on the left, it shows you what smart money is already doing. Approximately almost 25 flexi cap fund managers have increased their small cap allocations. If you see the largest AMC, which is the ICICI Prudential, has also gone from 8.3% to 27%. Bank of India from 14 to 31%, and so on and so forth. So this isn't a speculation. These are all fundamental driven rotations by these institutional managers. So now let me bring all of this together. The case for small cap today rests on three pillars. First is the valuation. Nearly half of the small cap universe trades below its 10-year average valuations. Second is the fundamentals. Balance sheets now look more clean and they have been in a generation. ROE is also rising and companies are now self-funding. And the third one is the flows. Institutional money is also actively rotating in, which typically precedes a sustained re-rating. So mid caps were winners of the last decade. Small caps could be the winners of the next one. So the opportunity is not merely about lower valuations, but it is also structurally stronger small cap universe now in that is increasingly capable of delivering a sustainable earnings growth. So if earnings continue to improve, small caps may be well positioned to outperform mid caps over the coming market cycles. So that's it. Thank you for watching.